Euro area disinflation. Despite a slight setback in May, the euro area disinflation remains on track. Headline inflation rose by 2.6% year-over-year, with core inflation increasing to 2.9%. A notable factor in this increase was the rise in services inflation, which jumped from 3.7% in April to 4.1% in May, driven by temporary factors such as changes in French health premiums and tourism in Germany during the bank holiday. Key disinflation drivers include the ECB's survey showing stable long-term inflation expectations at 2%, a decrease in median consumer inflation expectations, leading indicators suggesting a deceleration in negotiated wage growth despite a 4.7% year-over-year rise in Q1, a decrease in the contribution of services inflation to overall inflation from 2.5% in July last year to 1.6% in April. Implications for the ECB. May's inflation data align with expectations for the ECB to deliver a rate cut in June, but the strength in services inflation suggests a gradual approach with quarterly adjustments. U.S. PCE inflation. The core PCE price index, the Federal Reserve's preferred measure of inflation, increased by 0.25% in April, maintaining a 2.8% year-over-year increase, consistent with March's annual pace. This steady performance indicates potential for a Fed rate cut in September, contingent on continued disinflation over the summer. Spotlight on CMBS opportunities. Despite challenges in the U.S. commercial real estate (CRE) market, the past year has shown resilience, particularly in sectors outside of lower-quality office properties. Key highlights include positive net operating income (NOI) growth in industrial, retail, multifamily, and hotel lodging properties, increased delinquency in office CRE loans, but overall strong credit performance in other areas, mitigating widespread stress risk, appealing CMBS valuations with tight new issue spreads and strict underwriting standards. CMBS valuations and opportunities. The current CMBS landscape presents attractive prospects for investors due to better-than-expected fundamentals bolstering investor confidence, record levels of dispersion in NOI growth across property types, offering alpha generation opportunities, continued strong performance in retail properties, benefiting from robust consumer spending and reduced e-commerce disruption, and hotels gaining from sustained travel demand and inflation-aligned room rate increases. CMBS security selection. Active bond selection is crucial for outperforming in the CMBS market, with a focus on CMBS SAS-B, targeting recent issues meeting stringent underwriting standards with a preference for diverse property portfolios and select office properties. CMBS Conduit, prioritizing diversified loan pools and top-of-the-capital structure investments with ample credit enhancement. Central bank policies. The report provides a snapshot of central bank policies across major economies, highlighting current interest rates, balance sheet policies, and future outlooks. 1. Federal Reserve, Fed. Current federal funds rate 5.25 to 5.5%. Anticipated rate reductions starting in September, with another cut in December. Expected rate at end 2024, 4.75 to 5.0%. 2. European Central Bank, ECB. Current deposit facility rate 4%. Expected to start easing cycle in June, with quarterly adjustments. Expected rate at end 2024, 3.5%. 3. Bank of England, current bank rate 5.5%. Easing cycle possibly starting in August, depending on inflation persistence indicators. Expected rate at end 2024, 4.5%. 4. Bank of Japan BOJ, current policy deposit rate 0.10%. Additional but limited rate increases expected with a gradual reduction in JGB purchases. Expected rate at end 2024, 0.5%. Risks and disclosures. The report includes a comprehensive risk consideration section, outlining potential risks associated with investments in fixed income securities, including credit, liquidity, interest rate, and extension risks. It emphasizes that investments may be worth less than their original cost upon redemption or maturity. Additionally, international securities and emerging markets investments carry specific risks such as regulatory inadequacy, volatile markets, adverse exchange rates, and socio-political instability. Conclusion: the GFI Weekly Report provides critical insights into macroeconomic conditions, central bank policies, and investment opportunities, particularly in the CMBS market. It emphasizes the importance of active security selection and prudent risk management in navigating the current economic landscape. The analysis supports informed decision-making for investors seeking to capitalize on emerging trends and opportunities in fixed income and commercial real estate markets.